Hey guys, this is Jeff, Swing Trade Warrior with WarriorTrading.com, here with our weekly closed swing trade recap. Have several trades we got to talk about this week. One quick announcement, I want to let everybody know that we are now offering a couple of different products for different levels of traders. If you're interested in getting started in trading and you're a new trader, we now offer an intro to trading package, which is designed to help new traders get off the ground and to start trading, learning the basics through paper trading all the way on up to live trading. And we offer that course now for limited time at $99. You can check that out at WarriorTrading.com. The link is below. If you guys have any questions, you can email me, Jeff, at WarriorTrading.com. And also, we put a package together for our pro traders, people who are interested in all of our courses, as well as a heavily discounted annual membership to the chat room and mentorship for an entire year. We're now offering the Warrior Pro package. So if you guys are interested in any of that, check it out. If you have any questions about it, let me know, and we'll be happy to answer any questions you might have. So with that said, let's get into the trades from the past week for the first few days of July here. Now, the first thing I want to go over is the S&P. So we've obviously been hammered with news out of Greece lately that has caused quite a bit of drama in our own markets. We can see that the S&P has put in these massive days well outside of the average true range for a trading day in the S&P. So this is a chart of the SPY on the daily. Let me zoom it in a little bit here. So you can see once news out of Greece came out, we started selling off and we were quickly testing the 200 moving average within just a few days. 200 moving average historically is major support for the SPY. Once we tested a few times, we got a nice bounce in the middle here. We're never able to break the range to the upside. So you can see a massive resistance level or a resistance level being put in right here at the 208.30 area. We did break to the downside. We did hit almost 204 even on the way down when this news was causing capitulation in our own markets. So the volatility here has been intense for the past few weeks. Today, Friday, July 10th, we had a nice up day here. We ended up closing as a doji of sorts. It's not looking good going into next week. I think as long as Greece and China stay in the news, we're going to continue to see those macroeconomic factors impact our trading markets here in the U.S. And the reason for that is because macroeconomics affect the U.S. economy because U.S. companies are so heavily leveraged in other countries. A lot of our companies have money invested outside of the U.S. in smaller European countries, Asian countries, and when a country like Greece is on the brink of losing its membership in the European Union, it's on the brink of bankruptcy, it causes concern that maybe it's the first string to get pulled in a longer line of issues. So if Greece is struggling, then maybe a country that's a little bit bigger will become struggling, or will be struggling in the next few months, few weeks. And so we know that fear and greed are what drive the markets, in addition to supply and demand. So when Greece has issues, just because we don't have a ton of money invested in Greece, it doesn't mean that there isn't another country who may be a little bit bigger than Greece that starts to tumble because of what happens to Greece. So it could be a chain reaction of events. So having said that, we know that there's a ton of market volatility. And we'll go over the trades we took starting in July. Now in June, we had an enormous month for our swing trade portfolio. We did really well. We realized on average 6 or 7% a trade for our swing trades. We had like I'd have to look. It's like a 80% swing trade performance, win-loss percentage. So coming into July, this trade was on PTX starting July 1st, which I'll mark with this arrow. July 1st. So that means we got the alert on July 30th. Okay, let me zoom in on this for you guys here. Oops. Wow. I am struggling with my e-signal charts right now. Okay, so we got an alert on this trade. We got an alert on this trade on this big green bar day here where we had a 4% pop over the 20 moving average. The 20 moving average is this purple line that you can see. Our long entry for PTX here was over the high of the previous day and also over the 20 moving average. We had an open at our entry price. Now this is frustrating and troubling because when we're trading a small cap breakout strategy, we don't necessarily want to see these stocks that we're looking at gapping up in a market that also gaps up and tends to fade. So we're looking for stocks that are moving through the breakout spots, not necessarily gapping over them in pre-market trading or light volume. Well, this happened to be a day where we got a gap to the breakout spot, and during the open range, and I refused to trade the open range due to the volatility and lack of volume on some of these trades at that time. We got a quick spike up here with a high on PTX of 617. So I'll put that line in right here. It's a blue line. Once we got that pop up, we got a pullback. Now it didn't pop up to 617 initially. It popped up to about 610. We got a pullback to about $6 where it opened at $6 and a penny, 601. We got long on this trade. The breakout spot was at $6, which was the previous high of day, the resistance area. We got long at $6, and then it popped up to 617, and it continued to sell off all the way down to 574. The next day, the trade continued to the downside in a huge down market. It opened at 580, but it put in a low of 544. We were out of this trade at this time. We stopped out at the previous low of day here at the 574 area, and we ended up taking a loss on this. We stopped out at the 565, 570 area, and we ended up taking a loss on this trade. It only popped up 15 cents, 17 cents in our favor, but we got caught in a pretty big S&P downturn. At the same time, I'll pull up a chart of the IWM, which is the ETF for the Russell 2000. On July 1st, we also caught a nice down day. Where my arrow's at here. So July 1st, we got in the trade, which was right here. And then on July 2nd, we had continuation of this downward move. So you can see that any of the small caps that we trade are going to be tend to trade sympathetically to what the IWM is doing, unless there's some sort of catalyst in play. So if it's a pure technical trade, we're going to catch issues as far as the catalysts go, or as far as the broader markets go. So it's important to do top-down analysis when you're entering a trade or looking at a trade, but at the same time, you also have to consider the strength of the stock and the strength of the setup. In this market, Greece news had obviously come out back here on June 29th. We had some indication that things were going to be weak. And going forward, there's just no indication. There's just no way to know whether the market's going to shrug off the news or whether it's going to continue to have some sort of impact to the downside. So we took a loss on this and we stopped out of it. No big deal. The next trade we took was EPZM. Now, knowing we're in a soft market, we adjust our risk management strategy to compensate for that. And so when we're looking at this trade here, we got an alert for this off the scanner on July 6th. We sat out the biggest downturn in the market, and we waited for things to stabilize a little bit. We got an alert on this trade. You have this nice big move up on June 30th. Big flag pattern here, so the stock starts consolidating inside candle, trading inside this flag, and we put in a big move up, ready to break out over the top of this flag. We got long on this trade on July 7th. This is the top of the flag right here from back on June 30th. So we're looking for a breakout over this area. The area is 2440. The previous area of support, of resistance is at $24. We have a close and an open at the $24 area. So on this trade, when we got the alert, I looked back historically and said, where's a good spot to get in this trade at? I decided that the whole dollar area, and we know that half dollars and whole dollars tend to be mental support and resistance levels depending on the directionality of the trade. I said $24 is the spot I want to get long on this trade with half size. It's not the true breakout spot. The true breakout spot becomes over 24.40. We need to see the 24.40 area hold on a breakout for it to be confirmed. But I want to be in this trade at $24 in case we test that 24.40 area a few times. Well, we tested the 24.40 area. We got long on this trade on July 7th, and we ended up getting a close 24.27, just under the breakout spot. So I thought we were in a good position. Well, the next day we had more news out of Greece. The markets gapped down, took a dump on us, and the stock started selling off. So we ended up stopping out at the $23 area on half size. So it was only a half size loss, and that's the value of scaling into strength and bailing on trades with half size. You have more room to let the trade work, or you can stop out at the spot you would normally stop out at, but it's on half size, so your risk is controlled. In this case, we stopped out on half size at the normal spot, the $23 area of support. Once that broke, we were out of the trade, and it was only on 500 shares, and so it was only a $525 loss. When we were looking to average in on the way up over this breakout spot of 24.40, looking to take 1,000, maybe 1,500 shares for a move back up to $22, $23. So good risk reward on that trade. It just did not pan out because of the market weakness. Now, a trade we took to the short side, we had a swing short trade that was alerted to us on also July 7th. So in periods of particular weakness, here we go. Periods of particular market weakness, we tend to look for good short setups. Now, if I zoom this chart out, we'll see that there's a pretty massive support area right around the $52.80, $53 area. We can see that it almost tested it once last or in January, and since then it's bounced off this 52, 53 area at least 4 or 5 times. So that's a major support area. If the market continues to be soft and weak, we could get a pretty big drop at that area to new lows going back to June of 2013. So this stock, Tribune Media, TRCO, hasn't traded below $53 since June of 2013. Massive support area. Look at this previous support from June 13 becomes support all the way over here in 2015, right? So there's a correlation there. Good technical analysis, looking at the chart, realizing that's a major support area. We're looking to get short under $53. We got short on the trade, hit the scanner on July 6th. We got short on July 7th on the break of the previous candle low. We were short on this trade at 52.32. We ended up making a new low of 51.7 down here. So really, it was only a 60-cent trade or a 50-cent trade. There was not a lot of range on it. It was not, despite the market weakness, was not a great trade. Everything else seemed to want to move down, but this particular stock. So this ended up being a tiny winner for us. We locked up about 40 cents on it. I'm looking at my P&L here. We locked up about 40 cents on this trade on 750 shares. So it was a very small winner. But you can see the setup here going all the way back to the IPO in 2013. We had range all the way down to $48. If it would have gone, that would have been great. But for whatever reason, it held up at that support level. And if it ever breaks that support level, keep an eye on TRCO, because that thing has room to dump down to 48, and it is bear flagging right now. But even in market weakness, it didn't want to go. And if the news out of Greece that tanked everything else in the world didn't want to tank this, I'd be hesitant to get short under this particular area. Okay, CSTM, another long trade. We got alerted to it on July 7th, and we got long on July 8th. Okay, we had a high volume move of over 4% off of the lows here, and this was a good reversal setup with range to about from about $11 to just about $12.50, $12.60 or so. So that's the range we were looking at on this. And unfortunately, again, the next day we caught a massive gap down in the market, and a ton of market weakness drove this thing down continuously lower. We ended up stopping out on this trade again for a loss, you know, because we use good risk management techniques, we're not super worried about taking the losses on these trades. What we're considering, or what we're concerned about, is the market weakness. So we're going to consider more short positions going forward, depending on what the S&P and the Russell 2000 are going to do. Right now, the S&P and the Russell 2000 are trading at very critical support levels, just above them. So it's going to be key to watch in the next week what happens. You know, as the market is putting in, 40-point gaps to the upside and 30-point gaps to the downside. We need to consider market volatility before taking any position overnight. So, I got slapped 3 times this month so far. We did hit a winner. We'll talk about that. We hit 2 winners. We'll talk about that in just a moment. But we did get slapped a few times this month, and it's important to keep in mind that market volatility is definitely in play. So when you're taking positions long or short, keep in mind your size so that you can manage your risk. It doesn't matter how good the setup is. If you get caught in a market gap, you are going to pay the price if you go full size and the trade goes against you. Now here's SREV. This was a long trade we took. We're up 3% on this trade. This is a solid trade right here. We got the alert back here on July 8th with this 4% move to the upside on rising volume. This has a massive short float, and I think there's like 14, 16 days to cover for the shorts on this. So this is like 25, 30% short, and this is the all-time highs for this stock. Excuse me, the 52-week highs for this stock. If we can get this stock over this area right here at 616, where the gap was previously filled out, there's room on this trade all the way back up to 7. And ultimately it'd be nice to see it up around 9 or 10. I'm not looking to stay in it that long. I don't think it's going to make a straight move, but we have some good indicators that we're in a bullish trend. This thing is moving to the upside. We're trading above our moving averages. Okay? We're seeing a candle over candle continuation of the stock. So we got long on this trade at 572, 573 area. We scaled in over the highs of 575. The shorts started to cover, and we got a quick pop to the upside here on the day of the entry. It's July 9th. Day of the entry, we got a quick pop up to 583 before closing that day at 569, just below our entry. Today, Friday, we got a nice move to the upside again, candle over candle continuation. We still have high relative volume that you can see down here. Over 1 million and an eighth shares were traded today, and we ended up closing just under the highs at 589. I fully expect on Monday that we test this $6 area. We're still long on this trade. I scaled out a little bit of the position just to pay myself at 2.5%, just under 589, 588 area. I've locked in some profits, and I'm still carrying a few thousand shares through for a test of the $6 area. Remember, if we get through the $6 area, if I zoom the chart out, we have range here. If we can get through this area right here, 616, we have range to the next support area at 721. Previous support becomes resistance. Previous resistance becomes support. So our next target is 720 once we get through the 620 area. Looking to stay in this trade. Hopefully we'll make a point off it over the next few weeks, but I'll take what I can get out of it. So far that's a winner for us. Next trade I want to talk about is THLD. We got long on this one on Friday. We got long on this trade on Friday, July 10th. We had a scanner alert hit on July 9th. We had a 4% move up on ascending relative volume. And the next day we got long over the previous high. I put this trade on the watch list with an entry over 410. So the entry trigger was really 411. This trade hit an intraday high right here of 424. The last time we traded the stock, we locked up 7% on it. Solid move to the upside, very clean mover. We traded it back in here in June during this little 3-day, 4 or 5-day run. You can see that we had a pretty clean run, and it flagged out and moved back up to 450. We were in this from the low threes. So then it sold off, and now it's flagging out again, or consolidating again, and now we have a breakout move to the upside, looking for continuation back up to 450. We're getting candle over candle moves. We're going to trail our stop up at the low of day. We don't want to see candle under candle or candle breaking the pattern of the continuation of the trend. So far that's a winner for us also. It's tough to trade in these markets right now, and it has been tough for a couple months. But we know that if we stick to our strategy, whether we take a loser or two at the beginning of the month or the end of the month or the middle, or all three, based on the results of the strategy that we use to trade these small cap breakouts, that we're 70 to 80% accurate in wins per month. So if we know that, we stick to the rules of the trade and we continue to trade. We continue to trade the setups, and market volatility does play a factor, so it's important to keep in mind when you're considering your position sizing, because the market could always gap down tomorrow based on some news out of BFE, and we can get hurt. So position sizing aside, we know that we can be profitable in these kind of markets if we stick to our rules. It's more important than ever to not become emotional when we're trading, and so that's what we attempt to maintain to do. And so far so good. July has been a horrible start for us as far as swing trading goes, but we're only 10 days into the month, and I know that if we stick to the strategy, we're going to end up with 80% profitability, between 70 and 80% win ratio, and we'll be profitable by the end of the month. It's the same strategy I've used through market conditions for a long time now. So I know by controlling our risk that we can control our profitability. So those are the trades from this past week. If you guys have any questions, you can email me at jeff@warriortrading.com. If you want to talk about anything else, let me know. Hit me up on Skype. My contact information is below. And just a reminder to everybody, if you want to if you're interested in learning how to trade and you want to get started, we now offer that $99 intro course for new traders. That covers everything you need to get off the ground, from looking at the stock market on CNBC to actually learning to trade. So if you guys have any questions about the class, let me know. If you want to check out what's in the class, go to warriortrading.com and click on the Intro to Trading course. Other than that, I hope everybody has a great weekend, and we'll see you next week. Thank you.